You guys know the phrase, a penny saved is a penny earned. Well, I could potentially show you how to earn an extra 1 million pennies a year, or about maybe $10,000, potentially. But stick around and find out how. So, all right. And as I promised, how do you make 1 million extra pennies a year? So before I get into that, let me introduce today's topic and who I am. Today's topic is about why I should separate my business finances from my personal finances. And we're gonna go into about maybe 6 different areas as to how to do it, why it's important, some advantages and disadvantages, not disadvantages, but dangers that you can get into. So now let me introduce who I am. My name is Ryan Silvestri. I am a senior business consultant with the Small Business Development Center of New Jersey, and I'm also a team member here at USPAC. So now let's get right into it. Why should I separate the two? So a couple of different reasons. The first is going to be legal and liability protection, which we'll go into a little bit more a little bit later on. Accurate filing, financial reporting, I should say, which leads to better decision making. Again, we're going to get into it in a little bit. Easier tax preparation, a better relationship between you and your accountant. It's going to be also a less expensive relationship between you and your accountant. And another one could be improved business credibility. So it gives you the ability to scale the business, which I think, in my personal opinion, is perhaps the most important reason why you want to separate the two. It's very difficult to be a business owner versus a self-employed person, because I don't want to give myself a job. I don't think any of us ever dream of giving ourselves a job. We want to be given the freedom to choose what we want to do. And once I start to separate the finances from my business, from my personal, I can scale the business, replace people that can do the jobs that I'm doing, and potentially give me now the option, the freedom to do what I want to do. If I want to stay at the business and continue to bake cupcakes, I now have that option, but I could also take a vacation because I scaled the business, and I have the ability to create a budget, create a plan, create business models, seek investors or banking funding in order for me to scale the business. So let's get into the how-tos. So one of the first steps in how to separate my personal finances from my business finances is I want to open up a business checking account. A business account in general. I want to have a business relationship with a bank that fits the needs of my business. That could be the geography, the amount of tools they have online, the amount of ATMs they have nearby, the type of fees that they have. These are all the questions that you're going to ask. Does this bank have the right fit for me? Does it have the right products? So we need to choose a suitable bank or credit union. And then once we have that bank that we want to work with, we're going to talk about what kind of vehicles do they have, what kind of tools do they have for us, what kind of checking accounts exist, what kind of fees are associated with those checking accounts, what kind of savings accounts do they have. Something that a lot of small businesses miss is an investment account. Just like the way you invest, your business can invest too, especially with money that's not using or it doesn't need or is having in reserves, which is going to be one of the main keys that we're going to talk about in a little bit with the importance of separating the two, because it allows us to create a budget which puts money aside for a rainy day. So those are the two areas that I want to focus on, that I want to really address as far as opening up a bank account. And we make sure for anybody who is starting or thinking about starting to open up their business for the very first time, we can't do that until we fully register the business, because the bank is going to ask for a tax ID, and it's difficult to comply with the bank's requirements if I haven't fully registered my business yet. So the step two is going to be to discuss the different types of accounts that you have with the bank, which I started to hint at this a little while ago with the checking and savings and investments, but there's also other things that the bank can do. For example, they can help me open up a credit card, a business credit card, so that I can see every time that I make a decision to purchase something that should be on my business credit card or my business debit card. At the end of the year, I can take a look at all the expenses that related to just the business versus those that are for personal use. because commingling funds is an easy way for us to flag a a red flag, I guess, with the IRS and start a potential audit. So there are different types of business credit cards that are dedicated just for small businesses. This will be a good time for you to talk with your accountant, a financial advisor, to see, are there differences between one credit card or another card or a charge card? There are differences and there are benefits of each, and an extra downside to some. If we don't, I shouldn't say that there's a wrong decision. There's just some decisions that are better than others. Okay. By doing a business credit card, it also allows us to start building business credit history. And it's one of the things that that is a common misconception that I see with a lot of first-time business owners. They'll say, no, my business is borrowing this, not me. Well, in the very beginning, you are the business. And if you guys registered as an LLC is just an extension or a pass-through entity that will pass all the business income through a separate schedule, but then it gets combined with your personal tax returns. So we want to make sure that the more separations that I have, the easier it is to create a separate entity and scale that business, like I mentioned. Another category that I want to go into is is setting up your accounting system. So the accounting systems that we choose give us I guess, information and data that's very important to making smart decisions. Without quality information, I cannot make a quality decision. And if I have my finances commingled, if I don't have my transactions that are business on a business card, it's very difficult to see what's the return on my investment, what's the return on my equity, how efficient is this activity that I'm doing, how effective was this decision. But if I can trace the paper trail and the dollars from the idea to the bottom line and say that this decision that cost me this much money yielded this or potentially, helped do this, now I can say I can double down on that. But if this wasn't good, I can say, well, maybe for next quarter, I will adjust it. Why didn't it work out? But at least it shows me that something didn't work. I put a lot of money into this product, into this idea, into a person that you hired, but it didn't really trickle down to the return on my investment that I was hoping. And now I can make the adjustments. But again, it's very difficult to make these decisions if I don't have the quality data. So an accounting system. Now, there are a bunch of accounting systems out there. I can't promote any one particular one. I can say there are some that we all know. There are some that are completely free. There's one that I use a lot that's a freemium one. And what that means, it's free to use. However, they will try and sell you special add-ons that aren't needed for everybody. So you might be able to get away with using just a free version of some softwares. Just do a quick little search online to see, what accounting options work for you, but also have a conversation with your accountants, because ideally you would want to be able to pull reports from this bookkeeping software and submit them to your accountant. And we want to make sure that it's set up correctly, which will be perhaps the biggest conversation you're going to have with the bookkeeper. The research, if you want to do it as a project on your own or with the accountant, is what's called the chart of accounts. So the chart of accounts is going to be the collection of all the different accounts that are very specific to your business. That could be the bills and the type of bills that you pay versus the type of bills that the business down the street pays that I don't have. So it's very important to set up the right chart of accounts. This way, the accounting software that you guys chose will be able to better classify the income and the spending into the correct categories, and then again give you quality information that you can make a quality decision on. So, and there are different tools, by the way, that some of these bookkeeping softwares will have that are important to you and your business type. So there's no one size fits all. For example, let's say that you are a restaurant and your restaurant has a very specific POS system. It might work really well with one type or two types or three types of bookkeeping softwares, but not one that you found independently, of any other research that you might have done. So it's very important to look at what type of tools the bookkeeping software has, what kind of features does it have, does it get along with my POS system, can I access it online, can I access it from my phone, how easy are the reports to read, is there AI in it, which is a big point right now, so I'm sure we all have been affected in some way, or another with AI. And for most of us, it's usually a benefit. So we need to work with it. And there's a lot of accounting systems out there that are incorporating AI. So the moment that you swipe your card to make a business transaction, it'll recognize where it should be categorized, and you will be then just doing like I guess reconciling your books maybe once a week, or less often. It all depends on the bookkeeping software that you're choosing. So so the next category of what to do or on how to separate your personal and your business finances is to create or allows you to create a budget and a financial plan. As many of us know who, if any of us work out, or if any of us, like to cook, we have a manual that we follow. It's a workout schedule or a recipe. And the same is true for our business. If I say I want to make $1 million, I want to make $50,000 in my pocket by the end of the year, how do I actually get there? Now that's part of the promise that I gave you guys earlier before on how do I make that million, $1 million extra pennies at the end of the year? Well, the biggest reason, or not the biggest reason, but the biggest, easiest example, I should say, on how do I earn an extra million pennies? So if I take a hypothetical scenario, let's say that your business made $50,000 at the end of the year of taxable income. So usually the way that works is our top line revenue, which could be, I'm going to make up a number, I don't know, $200,000 of top line revenue. That's how much went to my registers over the course of a year. Now I subtract from that all my operating expenses. And for this example, since I made $50,000 of taxable income, that means that it cost me $150,000 to operate my business, and the leftover money, the taxable profit, is before taxes is $50,000. But if I had my accounts commingled, my business and my personal, and I didn't have dedicated credit card, I didn't have a dedicated checking account, it's very easy to overestimate or underestimate your taxable income. And there's a lot of times where what I see is that most of us forget small little things, like the gas that I use to get to a meeting, or the web hosting fee of my website. See, these little things add up, and potentially I can reduce my taxable income from $50,000 to, let's say, $40,000, because I really took care of and I noted every single expense that I had throughout the entire year that was related to my business that usually sometimes gets dismissed. That difference is $10,000, which is $1 million pennies. So now you guys just learned how to earn $1 million pennies, or $10,000. So that would be one of the easiest examples. But that again comes from creating a budget and a financial plan. Work with a financial advisor, work with your accountant, with the bookkeeper, and say, this is my goal. My goal is to sell the company for this much money at this time, or my goal is to be able to acquire a loan of this amount, secure, certain assets, whatever the plan happens to be. But now I can reverse engineer it and say, in order to do that, I need to have this many sales done on a monthly basis, weekly basis, daily basis, which now affects my marketing plan, or I can say, I want to, I don't know, there's a bunch of different examples that we could get into. But the idea is creating a financial plan, which allows us to create an actual budget, and then we can stick to it. And then we can monitor our performance over the course of the year to the budget. So ideally what you want to do is look at that at least once a quarter. So every couple of months, you're going to take a look at your at what your goal is and how close you are to your goal. Depending on your business, you might have seasonal cycles that says, right now it's the winter, it's a slow season, but I'm going to ramp up production or sales now come the springtime. And then my springtime performance, I can start to measure and see what's working and not working, so I make sure that I get to that goal. And that, again, very difficult, nearly impossible to do if I don't separate my my finances. So that would be one of the key things on both. And a quick little tip or trick. There are some bookkeeping softwares that if you're on the road, let's say you have a business meeting and you had a client that you met with, that you met at a cafe and you bought your client coffee, that's a legitimate taxable write-off. So a lot of bookkeeping softwares have the ability to integrate an add-on where you can take a picture of the receipts. You no longer have to have a shoebox full of receipts. Take a picture of the receipt, talk to your accountant first to make sure that we're doing things correctly. But you can take a picture of the receipt with your bookkeeping software, and it automatically categorizes it and files it and saves it in case of an audit. So we can track exactly how much we spent. Or simply, even if it doesn't have it, still a good idea to take pictures, save it on a cloud folder with all the business receipts throughout the year, and then now you have I guess a digital shoebox to record and really track all the expenses that I incurred throughout the year. All right, so that's on how to set up a separated I guess world of my business finances and my personal finances. So now let's talk about best practices for financial management. Now that I have a clear separation between my business finances and my personal finances, what do I do? So like I mentioned before, one of the things that you want to do is you want to monitor and track your finances regularly. So at least once a quarter, like I mentioned, and go back and forth on what adjustments can I make. Again, like I mentioned, quality data leads to quality decision making. So was this a good decision to visit so many clients and buy all of them coffee every single time? Was there a more efficient way, or did that lead to increased sales as compared to last year? It's very difficult if anybody is doing this for the very first time to have a really deep insight without comparing it to past performance. So where this really makes, I guess, big strides is once we have a full year of data of how my business behaved, I can then compare last month's performance, let's say, last June's performance to June's performance of the year before, and compare apples to apples. What really did happen? That's when this is going to take a lot of value and a lot of momentum. But from the very beginning, you'll see benefits. So so the other thing is we want to make sure that we stay organized. So on a regular basis, working with our bookkeepers and working with our accountants to make sure that we're tracking all the right expenses and that we're tracking all the right data points, to make sure that that we are as compliant as possible. And again, the goal is to lower the tax liability at the end of the year. So the next section on best practices for financial management would be talking to your accountant to see if it makes sense to pay yourself a salary. I know that if we're starting out a business for the very first time, it's very difficult to pay myself a salary, especially if I have very little money and I'm bootstrapping everything. But as soon as you can, it usually is a good idea to pay yourself a salary. The reasons is, one, it will lower your business's overall tax liability. And it's easier and more efficient to manage your personal tax liability that you'll have. And as a reminder, there are different business entities out there, and each one behaves a little bit differently. So whether we choose to create a company as an S Corp, as an LLC, usually it's the most popular ones, but there's a few other ones out there. Subchapter C, LLPs, and stuff like that. But for the most part, a good chunk of the small businesses are either LLCs or S Corps, and both have unique limitations and benefits on how to structure my taxes and what other things I can do. But for the most part, I want to be able to say, if I have a tax structure that falls under this category, like my business sees this category, what things am I allowed to deduct? and if I have that communication, that ongoing communication with my accountant, and I know I mentioned it before, but I want to emphasize it, your accountant is your business's best friend. Don't talk to him or her just once a year when it's ready to file taxes, but talk to them regularly, because they are your financial party financial team. They are a financial advisor to you guys. Saying, because I am an S corp, because I am an LLC, what habits, what routines should I be following throughout the year to make sure that I am in the best position for next year. And tax planning is something I did not mention yet. And with my experience with the SBDC, since I've been there, I don't know, maybe let's say almost 20 years now, I would say one of the easiest ways that I've seen people trip up, I guess, is a lack of financial organization, but not keeping track of what liabilities, what responsibilities they have in order to scale the business. Okay, so paying yourself a salary, conversation that you should have with your accountant on whether this is right for me at this stage or not. And it also helps you with planning for the business, because it says I have a budget. I give myself, my first year, a $10,000 a year salary. Next year I can increase that to 20,000 or 50,000 until I get to my comfortable goal of, 100 grand a year or 200 grand a year, whatever that number happens to be. So, so that's very important. Next category is going to be, it saves money on your taxes, or you save money for your taxes, and you save money for an emergency. So we all just came out of the pandemic. A lot of businesses didn't make it. Some businesses thrived, but it all depended on the unique business model, how quickly we pivoted, excuse me, but more importantly, what kind of contingency plan do we have? And a lot of us don't have a contingency plan very often. And if I were able to have a financial management system in place, I can say that 2%, 5% of my top line, bottom line, however I want to design it, goes into an emergency reserve account. By having an emergency reserve account, when times do get rough, when times do get, and it doesn't have to be another pandemic. It could be something as simple as just the slow season of my business. It could just be the winter. I have money set aside in order to get over that tougher period. So that's one of the reasons why we want to make sure that we understand what our budgets are for our business and how much money we need to have aside in case of emergencies. So again, more important today than it was before. When someone looks at my business and says, I want to invest into your business, or I want to, I am, bank ABC, and I want to look at lending to your business, what kind of risks am I going to have? What kind of risks do I think I'm going to be facing? And those are usually addressed with good financial management. And the last section for the last points, I should say, as to why the benefits of this helps me with saving for taxes and for emergencies, is that as my business grows, my taxes should be paid quarterly. And if I understand what my estimated tax bill will be at the end of the quarter, it helps me save. And that's something that I forgot to address a little while ago. So one of the biggest areas that I've seen with most businesses that don't do this properly is that they don't have a conversation about tax planning. And tax planning is an area that's like I mentioned, usually dismissed. And it's an easy way for us to scale our businesses. If we have a conversation about what to do for this coming year, that will not only maximize my profits and my business's ability to cash flow positively, attract new capital, but more importantly, minimize my taxable income, because I took advantage of certain benefits that are out there, certain tax credits and rebates, whatever it is. But nevertheless, there's going to be an amount of tax that I pay. And by creating this type of budget, it allows me to make sure that I have that money set aside for my taxable, income that I have to pay at the end of that quarter or at the end of that year. It all depends on what your accountant says is a good fit for you. So other category is which is what I mentioned before. It's my favorite one, which is the ability to scale your business, because now I have data that I can review and adjust my financial strategy accordingly, depending on what my goals are. So remember, regularly access your financial performance reports and find out when do I need to make an adjustment in order to reach my goals. So have a conversation regularly with your accountant. You can print up from most bookkeeping softwares your income statement, your balance statement, your cash flow, maybe even aging statements. It all depends on the unique model of economic model of your business and what reports and what chart of accounts I set up and what reports I need and stuff like that. But the idea is that it gives you flexibility in adapting to whatever the change is in the business climate or challenges that you might be having, in order to make sure that we stay there with our doors open and continue making money. All right. So the next area that I want to address are the dangers of mixing personal and business finance. So I already spoke to you about how to do it. But now let's talk about for those that say, I'm not really quite sold on this yet. It's not really time for me. I do want to make a clear distinction. Do I have to do this? There's no legal requirement to do this. There's no legal requirement for you to even set up a business entity. Is it a good idea? Absolutely. I strongly encourage everybody to not only get their all their documents in order for their business, but to get their financial records in an organized way. So the dangers. One, legal implications. I addressed this a little bit in the very beginning, because one of the things that could happen is there's a phrase that we've heard before, which is piercing the corporate veil. The veil is a barrier that sits in between everything that you personally own and the things that your business owns. And although you might have a business entity that says, this is the amount of separation between the two, again, talk to your accountant, talk to your tax attorney. Different legal entities provide different amounts of protection, but we want to make sure that there's as much separation as possible between your personal house, your personal car, your personal assets, and those that you use for your business. And if we don't separate the two, there is a blurred line between the two, and there's more there's more dangers that I can get into. So excuse me. So that's the first one, the legal implications. The next one is going to be the tax consequences. So there are potential tax issues that could arise from mingling finances. Usually that results in penalties or just at least an audit risk, which even if you did everything correct, it's still a nuisance to go through an actual audit. So you want to make sure that we separate the two in order to avoid any type of audits or being flagged for for future audits. So these are the things that we can look at. And the one that I keep coming back to is the scalability one, but in this case, it's very difficult to track how effective my business is or how effective my decisions are without a clear separation and without these reports. I can't get these reports if I'm not tracking it. A lot of us, and even in my own family, my grandfather built a nice chunk of change for himself, but didn't have a business plan, didn't have a financial plan. So he was only able to get so high. If he would have had business plans, financial tools in place, he could have been, quadruple the success, or could have achieved quadruple the amount of success, or who knows what the limit could have been of his success. But he stayed a small business, and like a lot of us, we are sometimes immigrants from other countries, and we're bringing with us the culture of how businesses are run in other countries. And for me, most of the people that come from, I guess from my part of the world, end up becoming business owners here out of necessity, and stay a slave to their own business for years to come. And it's difficult, again, to get out of that cycle until I start to financially plan, create the goals, create the the system that gets me to those goals, and then scale and then replace myself, within that job, replace, give that job to somebody else. Okay. So, yeah, I guess that would be the last category for financial management, for the difficulties of financial management. The next category of what I want to talk about, and which is the last section, are the opportunities. I just spoke about what the dangers could be. Now let's talk about what the benefits could be. So, a lot of it sometimes is just the opposite or the reciprocal of what I just mentioned. But the first one is improved financial decision making. Been saying a couple times, quality data leads to quality decisions, and it's impossible to get that without a clear separation of the two. It gives me better insight, not only for me, but for advisors from the outside, because you guys are in it every single day. You guys have sometimes a perspective of your business that no one else is ever going to have. However, like the Knights of the Round Table, I can get better decisions when I bring outside minds to a meeting. So I can set, whether I create a board of advisors, which could simply be some friends and family, or it could be my accountant, it could be my business advisors, it could be my attorney. But I can now have a report and say, this is how my business did last year. What do you think I should do next year? Or this is how I did last quarter. What do you think I should do next quarter? This is my goal. I want to get to $1 million in the next 3 years, 4 years. And these are the pitfalls that I've had, which are very clear if I have good financial reporting. So that would be the first one. So better insights, not only for you, but for the people around you. And the other one is it identifies where I can cost save or cost cut in ways where I don't jeopardize the value or the quality of the product or service that I'm selling. Because it says this one tactic that I did, I joined a networking group. I went to certain conventions, but can I trace how many clients came from that convention? Is it a good idea for me to attend that convention on a regular basis? So those are tactics that I can say came because I saw my reports and I saw that that's not a good use of my money or my time, so I cut it out. And it allows me now to reinvest that money into in a place where I'll get a higher return on that investment. So the idea is expansion, and always thinking about how to scale my business so that I can keep my income, not keep my income, but get my income on some type of automated basis. And then the last one is that it helps you build business credit and credibility. It's very difficult for a bank to have a lot of faith in your business when they have to take time to really separate how much of the business was or how much of the expenses were business related and how much of the expenses were personally related. Did you go to that cafe for, I don't know, for you, or did you go to that cafe for a business meeting, as one example? And once I have the ability to track all those expenses, the business becomes that much more transparent, and I can show that I am very efficient at my decision making. So therefore, I can start to grow the business, and then the banks feel more comfortable in investing into your idea, investing into you specifically. So that would be the first way that we can build business credit and credibility. The second one, if it's needed, if you are looking for investors or partners, again, it makes things that much more transparent, and it makes me feel all warm and fuzzy on the inside if I am that investor thinking, do I want to partner up with you? What kind of decisions have you made in the past? And again, nearly impossible if I'm looking at your personal checking and trying to separate all the different line items from what you spent personally versus what the business spent. So in a nutshell, those are the biggest points of how to separate and why to separate your business finances from your personal finances. And I encourage everybody to reach out to the USPAC and find a consultant and an advisor, or just simply network with members here at the Chamber of Commerce with with a person that can help you set up your system, your financial system, so that it keeps your business finances separate from your personal finances and helps you grow with your business. So thanks for joining me on this quick little video. I hope you guys learned something, I should say. And hopefully I'll see you soon. Take care. Bye.